going with the content. Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I teach home business owners how to win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. All right, so today's topic is really not necessarily a home business topic, but it's something that we definitely need to keep an eye on because what has happened as of January 1 is that the new tax laws, tax reform, the Tax Cuts and Job Act, all of those names, went into effect January 1, 2018. And so and really when it comes down to these tax laws, you guys, the language is still being written. Okay. So the IRS is still trying to write the language that really expresses what Congress intended to do. Okay. So there's an article out, that shares a report from the Tax Policy Center that says 45% of tax filers are expected to have a zero tax liability. Okay, that sounds really great. However, if it had not been for, if it was for the tax reform, before the tax reform, that number would have been about 43%. So really, you're looking at about a 2% 2% addition to people who would now have no federal income tax due. Okay. So right about 79 million households who will file will not have a tax liability, a federal tax liability, but there is still payroll taxes. Now, one of the things that I've been waiting to find out, and that I have been asking my clients and everything, is with the new W-4, have you seen a change in the amount of money you're bringing home? And a lot of them has said no. Okay, so that's interesting to me. Because even in my household, we really haven't seen a change either in the amount of W-2 income that's actually coming in the door versus what was before before tax reform. So if you're seeing a change in your W-2 income just based on the Tax Cuts and Jobs Act tax reform, I'd like to talk to you because I'd like to see what that looks like for you. Okay, moving on now. So even though there's going to be, these people with zero federal tax liability, and really, that can be spread across different incomes, right? Because not every tax situation is the same. So you can have someone who's a low income earner that would have a zero tax liability. You could have someone who is a high wage earner that has no income tax liability. It's just based on the whole picture. So higher income people deal with things like investment losses, which reduce your taxable income, which then reduces your tax liability. And also the higher itemized deductions as well. So wealthier Americans, have a different picture than lower income Americans. But overall, it's not just low income filers that have a zero tax liability. There are other income filers as well. Okay. So I just want to make that clear. But now the thing that's not going to go away though is the payroll taxes. So you've got federal taxes, you've got state taxes, and you also have payroll taxes. And so I want to talk about the difference between those so you really understand what it is. So when you look at your W-2, there's the federal income tax. Okay. That's the federal income taxes that we're talking about. Then you have Social Security and Medicare. Okay. And also unemployment insurance. Those are your payroll taxes. These are the taxes where you as the employee are responsible for one half and the employer is responsible for the other half. So there should be 7.65% of your income that's taking out. Now, and that's 7.65%. That is 6.2% Social Security, which is on the first 128,000 in income. Yep, 128,700 of income. After that, there's no more Social Security. But there's a 1.45% that's Medicare tax, and that has no limits. So it doesn't matter how much you make, 1.45% is going to is going to Medicare. Okay. So if you're at $128,000, you're going to see a 7.6 or below. So 128, 700 or below, you're going to see 7.65% of your income taken out for Social Security and Medicare. That's your payroll taxes. And then depending on your state is the amount of state income tax that you have taken out. Okay. So those are the three types of taxes that you have taken out of your pay. Now, how the various states are adjusting to tax reform, I can't tell you that. That's one of those things that you have to research your state, and I don't have time to research the 43 states that have income tax. Okay, so so now, like, what does all of that really mean? Okay. So you're still going to have your refundable tax credits, the American Opportunity Credit. There's the child tax credit that's partially refundable. There's earned income credit that is also refundable. So you still have those tax credits, but you're going to see smaller refunds because what's going to be happening is, based on a tax reform and based on a theory, that there will be fewer Americans who are overpaying their taxes. So that is what a tax refund is. A tax refund is not extra money you get from the government. A tax refund is an overpayment of taxes based on your income, based on credits, and, any other offsets that you have. Now, if you're taking, more money home during the year, that means there's less of an overpayment. So you're going to be seeing less of the tax refunds. Okay. So if you're used to seeing maybe, an $8,000 refund, it might be down to $6,000, so you really have to watch what your tax liability is. And you also have to look at where these tax brackets are now, because even though each tax bracket received a reduction, they also shifted the incomes for each tax bracket. So there is a certain segment of Americans who, even though that tax bracket received a reduction, because they shifted the incomes, you might find yourself in a higher tax bracket anyway. Okay. So that's one thing. The second thing is with the limitations on the itemized deductions, because there's going to be, the increase in the standard deduction, which is great. Okay, that means you're going to have where the standard deduction was doubled, which means where last year you could the standard deduction was $6,050. This year it's going to be doubled to $12,000 for singles, $24,000 for married couples, and $18,000 for head of household filers. Okay, that part is great. But now with the limitation of the standard deductions, there's going to be some people who are going to be losing money in that particular arena. So if you're married filing jointly and you had, let's say, $30,000 worth of itemized deductions, you're at 24. Okay, because each of those itemized deductions have income limitations. One of the things that was eliminated with the tax reform is all of the expenses that were subject to the 2% floor, meaning that so like for an employee that worked from home, and you have unreimbursed employee expenses. So that's one of those things that was subject to the 2% floor. You could only deduct what exceeded your 2% of your adjusted gross income. So a lot of that stuff is gone. Okay. So it's a zero tax liability, but you're also getting you don't have the benefit of taking all of those itemized deductions. Okay. One of the other things that I found out that was really interesting in all of this is how the property taxes and whatnot are going to factor into this. It's not necessarily at the federal level, but more at the state level. When I was reviewing all of this, I go down the rabbit hole, you guys, when I read this stuff. But what I found that was interesting is that in some states there were poorer, lower income neighborhoods where the way that their districts were drawn, they were being double taxed in their property taxes. So they're supporting their own district, but they're also supporting wealthier districts. But the wealthier districts were only supporting their own district. So I thought that was really interesting at how, these, some of these district maps are drawn to affect your property taxes, where you're paying, some of these folks were paying property taxes to 2 different districts, where others were only paying 1. So I thought, that's some slick stuff right there. So you got to know, okay. But anyway, so going forward, what you need to do, and what I've been telling you all along, is really paying attention to your W-2 to see where you are for your federal taxes, how much is being taken out. There are going to be, you need to look at what you owed last year for 2017 and compare that to where you are for 2018. Will you get some credits? You may. I don't know. But you need to know the numbers, because not all of the taxes is going away. And I guess that's what I want. That's what I want to get across, is that, number one, not all the taxes are going away. And number two, that, if you're getting more money in your check, that's less of an overpayment. So we have to get out of the mentality of relying on tax refunds, because usually when people get tax refunds, you guys, that is the largest amount of money that they see all year. Okay. And, and then I was reading a report that was out last year, and it talked about how, people take these refunds and they're paying off, they're catching up on rent, electric, gas and electric, rent and utilities, but they're also paying off, high interest payday loans and stuff. Okay. So you got to understand that you have to shift away from that whole refund thing, because refunds are expected to be smaller, for the next filing year. So yeah, a lot remains to be seen. Like there's no person with a crystal ball that can honestly tell you how, this new tax reform is going to affect you. Like what's going to go up, we really don't know, and we won't know until all of the language is written and we start filing these returns. That's the truth. So the best thing that you can do is start looking at your own numbers, okay, and comparing those numbers to see, like, did you have, if you were single and you had, $15,000 in itemized deductions, and you were able to take that, okay, what's that going to look like for this year? Are you going to have that? Are you going to be able to reduce your tax liability that way? So, so you got to know your numbers, you guys, okay? So I hope this kind of sheds some insight to what's going on these tax streets, you guys. I'm always keeping my eye out for interesting stuff that comes across my desk to bring to you. But those payroll taxes are still going to be there, even if you have no federal income tax liability. So, and the interesting point that this article made is that the Tax Policy Center also estimates that 3/4 of filers will pay payroll taxes, and those who end up owing both really owe more on the payroll tax side. Okay. That's just Social Security, Medicare, unemployment. Okay. So yeah, so that's it for today's episode, you guys. Like I said, I hope that sheds some light of what's going on in these tax streets. And thank you so much for tuning in. Again, Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. And if you need a consult, you can go to this link right here, www.homebiztaxchat.com. All right. Have a great day, and I'll see y'all next time. Bye.